In this episode, we speak with the CEO and co-founder of Peachtree Group, Greg Friedman. Peachtree Group is a vertically integrated investment management firm specializing in identifying and capitalizing on opportunities in dislocated markets, anchored by commercial real estate. Greg has successfully led Peachtree in more than $8 billion in hotel acquisitions, investments, and development since co-founding the company. Greg was formerly Senior Vice President of Business Development for Specialty Finance Group, a direct lender providing hotel-first mortgage and FF&E financing, where he originated more than $2 billion of hotel debt. He was also previously Vice President of Business Development for GMAC Commercial Mortgage Asset-Backed Lending Division. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the Executive Chairman of Market Insight Media and the Managing Partner of Growth Cap. He is the host of Great Entrepreneurs, a podcast for driven entrepreneurs and business owners. Our podcast covers all topics related to the entrepreneurial journey, from ideation to execution to optimization and to reaping the rewards of a well-run business. In the minutes ahead, we'll share with you unique insights and tactics from some of today's most accomplished and inspiring entrepreneurs.
Greg, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Yeah, thanks for having me.
We haven't had many real estate investment companies or firms on. So maybe for the benefit of our audience, if you could just give us an overview of Peachtree Group.
Sure. So Peachtree is a vertically integrated private equity firm. So we invest, up and down the capital stack as it relates to commercial real estate, as well as we do have some investments outside of real estate as well. And as I mentioned, we are vertically integrated. So we own different businesses, or we have different verticals that make up our ecosystem that really help to drive the value across the different investments we're making, both on the credit side as well as the equity side. So we own a operating business that runs the real estate, which is primarily hotel assets. So it actually operates the hotels that we invest in on the equity side of the business. We own a development company. We have a lending business that's out there doing direct lending for all commercial real estate property types. We actually finance a lot of ventures outside of even just real estate as well. And then we have a, asset management company, and we own several other companies, again, that are set up to really optimize and just drive the performance of these investments, that we're making across the, different investment vehicles that we sponsor.
You have a really interesting background. You got started, it looks like, in real estate right after graduating undergrad from UT Austin, spent about 10 years maybe working for other firms, well-known firms, and then you embark on Peachtree Group. Let's talk about that inflection point there that led you to founding Peachtree.
So it's interesting. So as you mentioned, I went to school at Texas. And when I graduated from Texas, University of Texas at Austin in 1999, initially I went into banking, where I specialized in, doing lending to hotel projects. So I had, a lot of experience, within the hotel industry, as well as some other, commercial real estate, property types. So that was like my first foray into the professional world, I call it, is when I graduated college. But even before then, I was always very entrepreneurial, as an individual. Like I had a lot of different companies that had started or, owned, and these were smaller businesses like in college or high school. And so I always had that entrepreneurial spirit. And the reason I mention all this is in 2000, I met my, partner, Matul Patel. And, Matul had a very similar background to myself, had a lot of passion, not only for real estate and the hotel industry, but, was always very entrepreneurial as well. And then in 2005, I actually met my third partner, Jatin Desai, and he had a very similar background as well. He was very entrepreneurial and, came from an investment banking background. And really just want to sort of level set how it all sort of came about. But in 2007, we went out and bought several hotels, and that was really the initial impetus, or really to the initial us, founding and starting Peachtree was in 2007, May of 2007, when we bought several hotels. We actually committed to develop several hotels that we ended up building from the ground up. And it was originally, the concept was going to be that we were going to be a, more of like almost like a small family office that was just owning hotel assets. And we were going to use third-party operators. We were, hiring a lot of just different third-party groups to help us on the investment side. That was really the initial startup of Peachtree. Like any great company. We've had to pivot and evolve. And so with us, and, unfortunately, we started in 2007, but fortunately, we did start in 2007 because we learned a lot of lessons very quickly. And one of the lessons was in 2008, going back to the great financial crisis, as that started to take hold, we saw this incredible opportunity to go out and buy debt. We saw an incredible opportunity to buy real estate on the cheap because of the great financial crisis. But we also realized at this point in time, we had, call it 8 assets that we owned on the hotel side, and we had to play defense. And that's when we had to really go from being just, call it a small family office to, internalizing the operation side of our business. So we set up our own hotel management company in 2008 to run the hotels that we had purchased or acquired, as well as to run the hotels that were under construction. And then, we set up our development company as well, so we could be more hands-on on the, construction and development side of our projects that we were building, as well as hotels that we were acquiring and renovating. So we set up, a system to really play defense. And then we simultaneously were very successful early on in 2009 and 2010, going out and buying a lot of debt from financial institutions. That's really what propelled and allowed us to grow Peachtree, exponentially through those years.
For every 100 people that have the idea to execute on what you're saying, probably a very small percentage, maybe like 3 or 4 people would actually do it. Do you think you had natural entrepreneurial instincts? I think you mentioned that before, but where did that come from? Like, did that come from like your family? Did you see a lot of people kind of building their own businesses?
Yes, it's an interesting question from a perspective that, I grew up in a family where my grandfather was a doctor by trade, but he was a very successful, entrepreneur. He made most of his money not practicing medicine, but actually by going out and owning real estate. He was a home builder. He owned, movie theaters. So he owned hotel properties. So he was truly an entrepreneur. And at a very young age, because he was he was someone that had a lot of influence on my life and someone I had a lot of respect for. And so I think some of it's innate to a certain degree that you have the entrepreneurial spirit, but also I think I was afforded the ability to have a mentor, being my grandfather, that had that same spirit and, really, drove me to be successful. So that's, I would really give credit back to my grandfather, as well as even my mom, who worked for my grandfather. Both of them were, very much had a positive impact on that, entrepreneurial spirit, and gave me the, conviction to go out and take risks and, not to be afraid to take on those opportunities when they existed.
You mentioned meeting your partners early on and to help you found Peachtree. What was it that kind of you saw in them or they saw in you that made you think, okay, this is going to be a good partnership?
So I think it's shared vision, shared values, from a standpoint that, we were all very entrepreneurial. We came from families, each one of us, like my 2 partners, their families were very entrepreneurial, very similar to my family, where my grandfather and my mom were super entrepreneurial as well. And so we had that same value of willing to really get gritty, because you have to when you're starting up a business and you're being entrepreneurial, you have to be super gritty. You got to be willing to take on risks. You got to be willing to be, decisive, when you're making decisions. And you also simultaneously got to be willing to make pivots. And just, seeing those qualities, in my partners, gave me a lot of confidence early on to partner with them beyond them just being great individuals themselves. It was really just that shared value of how to go out and execute and make investments and having that discipline as well. So those were some of the factors that, drove us together.
And you've scaled, I'd say, very quickly. You're managing billions currently. How do you divide up the work between the 3 of you, I guess, to ensure that everything is operating well, but then you're also continuing to expand?
We all have defined responsibilities in the business. So, myself, I'm CEO of Peachtree, but, I'm out there, helping to, raise capital when we need to raise capital for different, ventures or investments that we're making. I'm also, constantly looking at all the new deals that we're doing while simultaneously running our business and trying to, keep all the different teams, because we have all these leaders of different business units, and keeping them all on the same page. So I spend, most of my time doing that as, the CEO of Peachtree. My 2 other partners, Jutin Desai, he's the CFO of the business. So he's responsible for all the financial side of the business. He spends a lot of time with me on the capital raising side. as well as, handling lenders and, working in, other areas of the business. And then Matul, who's the third partner, he's, focused on the development side of our business. So he's focused on, running all the new construction projects as well as renovation projects that we have taking place that, where we're invested on the equity side. So that's how we divide responsibilities amongst the three of us. Now, with that said, we have an executive team now of about a dozen individuals, and that executive team are leaders of different business units. And those team members, they all serve certain roles where they're helping assist the three of us. The secret sauce to Peachtree is really our, core team that's able to go out there and make sure we're always executing at a high level.
What's the most challenging aspect to the hotel industry? I mean, you're heavy into the hotel industry. One could say there's competitive threats coming from different areas. What have you found to be the thing that keeps you up at night?
Yeah, so the hotel industry is sort of interesting because it's, we do invest across all property types on the credit side. We're very heavily focused, obviously, on the equity side for hotels. And so hotels, what keeps me up at night is the fact that it's daily contracts. So, I mean, you are subjected to any type of economic disruption, anytime the consumer is impacted, anytime, businesses are impacted, it's going to be felt at the hotel level. Now, not all hotels are felt equally. Some hotels are more resilient through economic recessions. Some hotels, even through pandemics, we've learned, which no one really knew until recently, unfortunately. But, even during pandemics, certain hotels actually do well. Most hotels don't do well. So you're always subject to the next black swan event. So that's probably the biggest thing that keeps me up at night as it relates to just the hotel side of our business is the volatility and performance, but we mitigate that through how we invest, the type of markets we invest into, the type of product within hotels. Because when you say hotels, it means a lot of different things to different people. And we invest purely in the select service, limited service, extended stay type hotels. In some cases, some of these smaller, compact full service hotels that operate almost like a select service hotel. So these hotels don't have as much labor expense as you see with these large luxury type hotels. They tend to be less cyclical in performance because even in an economic recession, they tend to still get a good amount of business. So they're less impacted in economic down cycles. We also invest into certain brands like the Marriott and Hilton brands because they have proven to have a better distribution channel, better consistency of reservations. And you also have a better exit plan from a standpoint. You have a lot of institutional groups that are looking to buy those kind of assets, as well as, sovereign wealth funds and family offices and just high net worth individuals. So you tend to trade those assets at a much lower cap rate or higher multiple in cash flows when looking to exit versus some of the other types of hotels. So, we have our sort of our box that we're focused on. And most importantly, the best way we mitigate just that risk or the threats that face our business is we tend to employ, moderate leverage. We're not a group that's going to go out and highly leverage the assets that we own on the equity side. So we tend to keep our leverage points around 55% leverage on the, the value or the cost of the assets that we're making investments into.
You mentioned being involved in other investment activities as well. I was wondering what the most exciting area is for you, both within real estate, hotels, and other areas. What area do you think about and think could be like a big source of growth?
So hands down, the credit side of our business, and it's credit primarily against commercial real estate. We have a division that does film finance, which is totally unique. So if you want exciting and unique, the film finance side is probably the most interesting and unique type of business we're doing today. But that's it's a very small portion of our business, true business. I would say a big portion of our business today is the credit side of our business across commercial real estate, where we're doing direct lending to different developers, owners of assets or commercial real estate assets that need capital, acquire, develop, recapitalize. And then simultaneously within the credit side of our business, where we've had a lot of success scaling up through, the past couple economic disruptions or, down cycles, is going out and partnering with banks where we buy loans from them. During the pandemic, we bought over 180 loans from different financial institutions, primarily banks. During the great financial crisis, we bought about 50 loans from various regional banks and community banks. And just this year alone, really since December of last year till now, we bought close to a dozen loans. And so we're starting to buy loans again beyond just doing direct lending. So in the last, call it 5 months, we've bought about a dozen loans from different banks where the total face value of those loans were roughly about 250 million. And we've made about $700 million in loans, over the last 5 or so months as well. So we've been super active on making investments on the credit side. And that's an area that I think we can really scale up over the next 3 to 5 years, because I don't see, unfortunately, banks are broken. You probably have seen that, regional banks are under heavy pressure with regulators. They have balance sheet pressures just given with the impact of higher interest rates. And it's created, just a unprecedented opportunity for groups like us that were already in the lending space, which we have been since 2010. Really our business has just shot up over the last 2 years, given just the challenges across, traditional banks, which make up 50% of the commercial real estate lending market.
Yeah, hearing about the different areas you're involved in really kind of leads me to view the way you operate as very kind of nimble and opportunistic. You're able to go after other areas fairly quickly. And then you also mentioned film finance. So it leads into my next question, which is about focus and how you balance between these opportunities, but yet still staying focused on whatever the ultimate goal is.
Yeah, it's a great question. So it's hard because we have so much happening here, but we've done a really good job of bringing in, just great leadership, great talent that's helping us execute on these different businesses. And so it really frees me up to really take more of a macro view of each of these businesses per se. So my focus isn't necessarily getting into the daily grind of running each of these businesses. But, like take our film finance business. We have a leader who's a professional that's been in the entertainment lending space for the last 20 plus years. So he knows that industry. And it's an industry that, we spent, the last 4 years studying that industry. And it's sort of unique for us in the sense that we're not taking on creative risk in that space. It's really a receivable play where we're financing the distribution rights that are being pre-sold, before the movie is made. And that's how these movies are getting financed, is through groups like us that are coming in and leveraging those pre-sale agreements, along with leveraging against the tax credits that are available in certain states or certain countries that they're providing as well. So that's how we provide financing in that space. And it's it's similar to some other stuff we do as well, but it's very unique. But fortunately, I don't have to go out there and source that business or necessarily have to underwrite that business, because we have a leader and his team is focused, and that's Josh Harris internally, who runs our film finance business. And he's focused on, running that business daily. And he's sourcing, the potential opportunities for us on the different loan opportunities that we can make, as well as he's handling all of the execution of those loans, with his team. And I can take more of a, macro view of looking at the credits and approving which ones, along with, Jutton, who's my partner, the two of us, sit on the investment committee for it. And we can decide which ones we want to do and which ones we don't want to do.
And do you have a broad framework for easily filtering through what you will and won't do? Meaning you sit atop this investment management firm and you could go into many different areas, but the only way you would go into that area is if it's met by these XYZ factors and you have the good leader, but you could go fairly broad.
That's right. We have flexibility. So we have that flexibility to pivot, to go broad, take advantage of opportunities that exist. Now, with that said, each of these companies, each of these investment strategies, we do set a box on what we want to go do, but we're nimble enough where if the market's moving or if we see an opportunity that we didn't necessarily identify early on, we have that flexibility to pivot. But normally, we are staying in a pretty tight box. We're not going to, necessarily go take on undue risk unless we've spent a lot of time understanding and mitigating that risk that we're taking on.
How much do you think about culture, like the culture of your firm, the folks you bring in, and do you have kind of a philosophy around that?
Yeah, it's a big part. I mean, I think culture is sort of interesting because I think sometimes it's a little bit overrated. Sometimes I do think it's important too. So I sort of bounce back and forth because I think culture really is how you treat people. And if you treat people with respect and it starts from the top down, then, you can build, a team of trust. You can build a team of people that are excited to be in the workplace. But, the bigger part is, I love bringing people into the team that have that entrepreneurial spirit, because we are super entrepreneurial, that are willing to get gritty, that are willing to be, innovative, where they can be, where they're willing to be decisive. I think that's a big part of our DNA, is having that ability to be decisive at the right time and not being afraid to say no, but also, not being afraid and say, go back to March of 2020, we pivoted very quickly and we were very decisive, where we went out and bought a bunch of debt against hotel assets, as I mentioned, because we bought about 180 loans, which occurred in 2020, as well as, the first half of 2021. But we had to be super decisive, and the team was very decisive, and having those individuals that sort of share that ability and the drive to lean in at the right time, that's a big part of what we want to see across, the investment team. With that said, we do have all these other businesses beyond just making investment, because, corporately, we have about 250 corporate team members. We have well over, 2,000 team members out at the different hotels that we operate, for instance, within our operation company. And then we own all these, other ancillary businesses. And a lot of times these different businesses have sort of a subculture occurring down there as well. But when you look at us from a standpoint of just being the investment team, or the investment side of our business, being the core of our business, I would say the culture of having that sort of innovative spirit along with being entrepreneurial sort of resonates throughout the organization.
Last two questions. One is, can you tell us about a person, I think it's going to be your grandfather, who's had a profound influence on you?
Yeah, it's hands down my grandfather. Unfortunately, he's no longer living, but he had a huge impact on me. He was basically a father to me. So he was an incredible individual. And I would say he totally changed how my life probably played out, because without him, maybe I wouldn't have been as entrepreneurial, just given the fact that he had such a profound impact on me.
Is there one quote or thing he would say to you that you always remember?
And there's a lot of different things. One thing that he said all the time was that you have two ears and one mouth for a reason. So, listen twice as much as you're talking. And that always had a huge impact on me, because I'm a big believer. Sometimes it's better just to observe and listen versus having to weigh in on everything.
Excellent. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
We support a lot of different causes. Personally, I'm probably more about supporting the growth of our team itself. I love bringing in younger team members that have just graduated college, or maybe they're a couple of years out, and helping, create a path internally to grow professionally and eventually take on a more senior position within Peachtree, or we put them in a path where they can go take on a senior role at some other organization. So it gives me a lot of pride watching the different individuals that have worked here and have left, or even the individuals and the different team members that are still here that are in a much more senior role today, and watching them just be able to grow from an intellectual, professional, standpoint, as well as, financially be able to make more money over time as well. It's very cool from my perspective to be able to be part of that journey for them.
Excellent. Well, Greg, I want to thank you again for taking the time. This has been a wonderful conversation.
Yeah, thank you. I really appreciate it.